Welcome to the Compounders Podcast. On this show, we explore the topic of compounding from various angles, including through interviews with public and private company executives, investors who focus on compounders, and newer investment firms that are building a business they hope will become more valuable over time.
All opinions expressed by the host and the podcast guests are solely their own opinions and do not reflect the opinion of Devonshire Partners, LLC, or any affiliates. This podcast is for informational purposes only. It is not investment advice and should not be relied upon for any investment decisions. We are not recommending the purchase or sale of any securities. The hosts and guests may be beneficial owners of the securities discussed. You should not assume that the securities discussed are or will be profitable.
My guest on this episode is Alex Rawlings, the founder and managing partner of Raw Selection, an executive search firm that specializes in finding talent for PE firms and their portfolio companies. He is also the host of an excellent show called the Private Equity Podcast, which I was fortunate enough to be a guest on. In this informative conversation, we covered the founding inspiration for Raw Selection, the opportunity Alex saw to differentiate Raw Selection from other exec search firms, the evolution of the talent recruitment industry that is focused on PE firms, common mistakes PE firms make when hiring execs for portfolio companies, and how Raw Selection has developed an expertise in sourcing execs in the white-hot HVAC space. And without any further ado, here's my conversation with Alex Rawlings of Raw Selection.
Alex, I'd love to go back to the founding of Raw Selection and hear about what inspired you to start the firm.
But I think a lot of businesses begin out of frustration, and that was predominantly for me. The main aim or the main pain point was I was just frustrated in what I was doing. I thought things could be done better. I was naive, and I became very disenfranchised with the business that I was working in. And my missus just said, "Look, Alex, I'm sick of hearing you go on and on and on about how everything can be done better. Go and do it, or shut up and go get another job." So off we went.
Got it. And I'd love to dig in to that a little bit. I'm curious, you had experience at another executive search firm before starting the company. So what did you see what were those frustrations? What holes did you see in their offerings? Especially maybe when it comes to private equity space or just in general in terms of the recruitment area?
I use the term professionalization within recruitment, within search. It's just all the same, whatever title you want to put on it. But professionalization is the key element, and the building of infrastructure, the building of processes. And I see it a lot like a manufacturing plant. A lot of recruitment search firms run it as one person or two people do the lion's share, if not 100% of the work, and you just wouldn't have a manufacturing company that the person who sold you the product made the product, the person who sold you the product found the materials, the person who sold you the product did all the process, delivered you everything. And I was just looking at how do we compartmentalize the processes and systems that are done. And one of the big frustrations for me was a lot of it's built around data of my framework of how executive search, recruitment, all those processes work. Do you have the information of the people that you believe are the right people to do the job? And is it an exhaustive list? Now, no one ever gets to 100% of anything, right? But you need to be as close to 100 as you possibly can to then be able to, in simplistic terms, market to those individuals the opportunity you're working on. And that was one of my big frustrations was, we were single, we did what's usually turned in and coined. It's not as coined in executive search as much, but definitely in kind of mid-senior level and junior recruitment is the term 360, which means you do everything, right? And we didn't have the data build out. So I actually hired somebody who still works with the business now when I was there, and he would build out data for me, and he would identify all of the research element of the business to make sure we have as much of a build out of people as possible. And then I went to the business and I said, if we did this, we could actually probably eliminate, I don't know how many admin people we had that didn't do the admin that I needed them to do. But I was just like, these people could probably eliminate a lot of this, and it would, considerable, it's all the 6-figure cost saves. And I was told no. And I was like, well, I want to build this data and I shouldn't be having to pay for it myself. It should be part of business infrastructure. We also had a really weak CRM, and not everything was run through that, and I thought that should be the heart blood of the business. And then there was training and management and leadership development and people improvement. It was just get on with your job type scenario. So there was a lot of my frustration sat within the actual business infrastructure, which is a lot of my mindset around it, rather than what we actually did for the client, because all of that meant that the client didn't, in my opinion, get the best service because it was just the resume that hit the inbox that was the right person at the right time. Albeit, I drove my team to understand briefs and go through processes, but if you can't run a proper search process, then you can't, you just can't get the best person for the job. So that kind of got me there. And then also, I heard of other elements of the business that were pitching against Heidrick and all the big kind of Shrek firms. And I was just like, that sounds phenomenal. And one of the meetings they went to and they got laughed out and they were like, oh, we've never worked with you guys. And I asked the question, why? I wasn't in the meeting. But I said when the guys came back, I was like, well, why did you ask why? And they went, oh no, we didn't ask why. And I was like, why didn't you ask why? And it was that kind of moment when I was like, why didn't I ask why? Because they don't care, right? So lots of different things in that, but fundamentally it came down to business infrastructure to be able to just provide the best possible thing we can do. And I've got a big driver in me, which built into a lot of the personality profiles around reaching perfection, around reaching exceptional. So it's one of the demons I've had to battle with because you can't. But the more you strive for it, the closer you will ever get to it. Probably the further away you get from it, if you want to argue. It's like the more you read, the less you know. But that striving to be the best and striving to be exceptional. I'd rather play in the Champions League if it's soccer. I'd rather play in the Super Bowl if it's NFL than, I know college football's incredible over there, but I'd rather play at the top of the field, and that's what pushed me into that as well.
And with that blank slate and all of those thoughts about how the business should be run and set up, what do you think is different? What did you build differently at Raw Selection? And what does that look like now relative to, what you think the traditional executive search firm looks like?
So we went about, well, first thing I did was I brought the guy that was working for me within the last firm that was working for me, not for the firm. I brought him in and he helped us build data. And we went about mapping out the industry. And we mapped it at private equity level and we mapped it at portfolio level. Little did I know that we tried to do far too much with data. And that data goes out very quickly. It's very frustrating, right? The first thing we did, we actually mapped it from LinkedIn, which I actually hate LinkedIn. Most recruiters will tell you that, but most recruiters would die without it. We built all the data on LinkedIn. We got to tens of, probably just short of 100,000 records of people within private equity, within portfolio companies, within the areas we were going to focus on. And I was like, we just added a load of people. There was 7 CEOs in one company. There was too many people, too many people that passed, too many people that never worked there, too many people that did work there. But whatever, it was just a mess. So we just deleted it and started again. So then we built it on the actual data of our clients, because private equity are fantastic at putting all of their team on there and building it all out. Makes it nice and easy. So we first built proprietary data because we knew that if we know everybody in the space, then it's all around the outreach. Then we looked at how we process within the business around structure of service. Well, in fact, brand awareness and was the key thing because it was a new market for me. So we invested heavily in marketing. And like my third hire in the business was a marketeer. Now, most firms in recruitment, executive search, whatever, do not have marketeers. And if they do, they're big and they have 3. Right? We have 2 in our business now, and we are not Spencer Stewart, Heidi Rules, everyone else type level, because the brand awareness piece to be known works on 2 facets. One, it obviously makes it easier for us to win business, hence why I've invested in the podcast and in our YouTube channel, all those kind of things to become aware. But then also, secondly, is there is so much, I didn't know this at the time, so much scam messaging and outreach, and it's just increased, hasn't it? Our inboxes are horrendous. One of our digital marketers come into me today and had this conversation, and she was like, how do I get better at email marketing? And I was like, we have to think about the prospect of who we're speaking to and how time poor they are and how many emails they're getting, and make it accurate. So we invested heavily in our marketing processes and systems, and upgraded our client service and focused initially on those areas. And then we looked at our kind of infrastructure of how we work internally and splitting responsibilities between individuals. I don't have executive search guys writing job specifications or job adverts, because job specifications from our world are a bit pointless. But we don't write job adverts. We have what we call talent engagement packs, which we refer to as job descriptions on steroids. And our marketer writes them, because recruiters are not usually very good at writing or creating good documentation that's attractive. And the reason we say it's on steroids is because if you look at your average job advert, it's not great. It's not written by a marketer. It's written by a recruiter. It tells, like, one of my big bugbears is when you have roles and responsibilities in job adverts. If you are advertising to a chief financial officer, CEO, vice president, partner of a private equity firm, portfolio company, and you're telling them the role that they will be doing in your business, what on earth are you going to hire that person for if they need to be told what a CFO does in a private equity backed company? You don't need to tell them that. You need to sell your business. You need to sell the role. You need to sell the dream. You need to sell the opportunity. So that's why we invested heavily in marketing. That's why we separated. We hired people that are actually good at selling and winning searches. We hired what we regard as very process, data-driven, analytical, heavy question-based, inquisitive individuals that are very down in the detail to interview every candidate that we have that comes from our process. And we regularly get feedback of, hellfire, you guys don't miss anything. We go into every M&A, we go into every exit process, we go into your role and responsibility. We want to know exactly how you grew your revenue, all of these different things. And that's how we built our infrastructure. And we're still miles away from where we want to be, but that's how we begin to hire people into the jobs that they're good at, and we assign them those roles to allow us to flourish and allow other people to do the things that they're good at, rather than battering around with job adverts when they're a recruiter and they can't even spell, which is mainly me, to be fair.
Thanks for all of that. One thing that we haven't really talked about, but we've kind of danced around, is why private equity? Like, why this space? As you were thinking about starting this firm, why focus on private equity portfolio companies and kind of professionals in the private equity space? What did you see as the opportunity there?
Yes, there's two answers that I give this. One's a professional answer, and one's the what I regard as the honest answer. So the professional answer, if you want to hear that, is that private equity has a lot of problems. I won't name which firms, but the biggest, most well-known private equity firms in the world predominantly have below a 30% success rate on portfolio executive hires. Now, if they advertise that rate to their investors, you would be like, what? So a lot of these guys are like 1 in 5, 1 in 4 hires. And these guys are, they're investors. They don't know how to run portfolio companies in the most part, right? Obviously, there's a select few that have done that, and congratulations to them, but the majority don't. Okay? So there's a huge opportunity, and was a massive driver. Now, that's a professional answer. So there's a big problem to fix, and it's not been fixed. The honest answer, before I did it, that's the answer I give. I always give everybody two answers, actually, to be fair, and I let them choose which one they prefer. They always prefer this one, usually. The honest answer is I was ego-driven. I wanted to do the very best work at the very top. I regard myself as the hardest working, laziest person, right? I will work harder than anyone else anywhere I am, but I want to get the biggest return of investment for that hard work. And that's where the lazy element comes in, because I don't want to do it for £1,000 for a pay. I want to do it for a lot more, right? So I wanted to do executives. I wanted to play CXOs, and I wanted to be at the very top. So I researched all the industries. How do you get into it? And I found private equity. And I was told by a marketer, I don't know whether it's Jay Abraham or Russell Bronson or whatever, it wasn't told to me directly. It was reading their books and following their content. Make sure that whatever client you're going to choose has really big problems and really big bank balances. And that is why Raw Selection does private equity and not some other random thing.
I think that's a perfect segue to discussing the value add that you're bringing. So you got a problem is that private equity firms, when they hire executives, don't have a high enough hit rate for, I think, what their investors would want them to have. And of course, that has impacts on returns and everything and capital raising all at some point. That will all those roosters or all those chickens will come to roost, right? Excuse me. So talk to me about how you solve that problem and maybe, what the raw selection differentiation is from that perspective.
So we regularly get asked, what's our USP? And our USP that we operate with doesn't answer that question, so I won't go into that. But when we look at a business, and this is what I believe about any business, is, and when people say, oh, we've got the best talent, we've got the best X, we sound like everybody else when we answer those questions. And the question I always ask back at private equity firms when they ask me what our USP is and we share it, and I ask them what theirs is, and or what the USP about the job is, and it's typically it's a private equity backed business. I'm like, yeah, they all are. Or we're a private equity firm and we've just raised a fund. And I was like, BlackRock and Blackstone have both just raised funds and they're much bigger. So no one will ever work for you or no one will ever work for your portfolio company because there's always a bigger and better, right? But it comes down to, in very simplicity, of who is the simple things done brilliantly. And it's what a lot of sport advocates will say. Warren Gatland, who's big rugby, which won't resonate with a lot of your listeners, but I don't follow NFL. But although he's just been fired, so he's not done particularly well with the Welsh rugby team. But his mantra, before he didn't do very well, was all about doing the simple things brilliantly. And if businesses can do that, it's a pretty average world and there's lots of average service. And I compare it to if you go into a restaurant and the person that greets you at the door shows you to your table is just phenomenal with regards to engagement and communication. You are just like, oh my God, I'm really going to have a better experience, right? You could be in a Michelin star restaurant, okay? If the server and everyone is just miserable and horrible, the food can be exceptional. You will get a 1-star review in the most part, right? So that in simplicity is, all right, we just give a better service. Now that's what I regard as top line of what a client sees. What the real differentiation, and I don't share this with companies because it ends up being waffle and a lot of conversation, but it's what we spoke about at the start, and it's around that infrastructure piece, and it's around the processes and the systems that you've built in order to attract the very best talent, in order to engage with that talent. Well, firstly, source them and know that they exist, data. Second, engage with them and attract them into it, marketing. And thirdly, be able to then present, manage a process and run through it, right? So that for us is where the differentiation starts. Everybody's got a niche. We specialize in private equity. We don't work outside of it. Everyone's got a specialism within private equity, low middle market, small mid-cap type private equity firms. Private equity hires, portfolio company, low middle market up to kind of 200, 250 million max kind of revenue sizes, CXO, C-suite -1. Everybody's got that. Every private equity have it. Just who does it better? There's Vista Equity Partners. And I know obviously a few people if Vista Equity Partners, but this didn't come from one of the candidates or clients that I spoke with. But they talked about why their investing model has been so successful. Every firm's had its up and downs, but there's a hell of a story there, right? They invest in one avatar of software as a service businesses, B2B, within a certain revenue range. And their argument is they know their clients better than their portfolio companies. So the portfolio company in that world is the client. The client obviously is the client's client is the client, the portfolio company's client. Sorry, bad explanation, right? But they know their businesses, clients better than the portfolio companies do. And they're able to go get rid of the 80%, focus on the 20 big companies and scale that and carbon copy, mirror, right? They've had pitfalls, they've had things go wrong, but fundamentally, That's an incredible private equity model. They know what they do incredibly well, and they replicate that over and over again. Now, that's hard in the lower middle market because there's lots of, you have to have a level of diversification, possibly. Could you specialize more as private equity? Yes. Could these firms, but they can't do the deal origination for it, and they need to deploy the capital quickly enough because they can't do the marketing, right? But that for us is, how do you build exceptional infrastructure where you do the simple things brilliantly over and over again, your attraction of candidates, then your assessment of candidates, and then your presentation and your experience of the client. And that for us is what I believe that we're doing and we aspire to do and we continue to improve on doing, that will continue to separate us from everyone else above and beyond what I regard as the core fundamentals of any business. Doing things ethically, doing the right thing. If you make a mistake, you fix it, all that kind of stuff.
And I'm curious, within your processes and systems and all that infrastructure and your approach, how is sourcing candidates who are going to work for the private equity firm different from sourcing people who are going to work for the portfolio company, if at all? I'm just curious about how different or similar those whole processes are.
So I'll rephrase the question, because the sourcing process is fundamentally the same. The assessment process is obviously different. Now, if I take away the assessment of on the basis that a chief exec and a CFO and a COO are very different to a private equity vice president, principal partner. So the fundamentals of, well, it's not, I'm going to answer a different question there of why are they the same, rather than what's the differences. The key differentiators around the assessment of those individuals sits not just, so if you think most of it sits around high IQ in my world, high conscientiousness, and capability. The key thing that when private equity firms are hiring, which doesn't really work from a private equity to portfolio lens, but is the cultural element, because private equity firms don't fundamentally care so much about their culture of their portfolio companies, because they all want the same one, which is fast-paced, process-driven, data-orientated, all the usual stuff, right? You don't want a Donald Trump going into your portfolio company if your business is a creative organization. No disrespect to Donald Trump, but I can't imagine he would get on well in that type of environment, right? But the cultural element of fitting in within a firm is an incredibly important assessment level of how well does that fit, because every firm is flexible. They're all adult environments. They all provide great training. They all have access to partners. And then realistically, when you get into it, it's a sweatshop. There's no freedom and flexibility. If you want to leave to go see your son's baseball game once a year, you can't, because there's a deal or there's something better to be done. So I think where firms struggle on that basis is understanding the key differentiators, which comes down to marketing and brand, but it also comes down to understanding the actual firm itself. And a lot of that is, we get that feedback from the market rather than from the client, because they don't tend to tell you what's actually wrong with the business. They tend to tell you what's really good about the private equity firm. But those are that's in singularity is the key difference from an assessment process. Is there a lot more work to be done on that front than there is on the cultural element for the portfolio company?
Is it your experience that private equity firms have a much higher hit rate of hiring people to work at the firm, because essentially these people are hiring people who look like themselves and similarly motivated? I mean, it seems like it would be a little easier to get that right. And it's kind of within your skill set, because you're evaluating the skills that you employ every day versus trying to put it into a portfolio company. Do you think that's true, that they're better at hiring people for their own organizations versus for other organizations?
It's an interesting question when you say, are they better? I think the lens is different. I think when you hire someone into your private equity, what I don't see enough of in private equity, we see a lot in portfolio at the firm level, is they don't fire enough. They don't put pressure on the actual underperformance of the team members. They don't assess enough of how well and performance level is happening at that front. And I actually think that they probably look like they hire really well, but actually they don't. And they just hold on to average and above average, below average performance when actually they could be getting somebody as more of an athlete. We don't see enough churn. And of course, an executive search firm that specializes in the space telling people to fire people. Classic move, right? But if I talk about this just as running and leading a business, there isn't enough in that space of high accountability, of high performance. What people tend to leave private equity firms for, really bad culture, lack of deal flow, lack of fundraising, right? There should be more people getting pushed out because they are not at the level that they should be, that they are not able to execute at the high enough standards. And I don't think private equity knows what those standards are. I don't know if they know what an athlete is. I don't know if they know what the core competencies of these individuals are. I think a lot of them just do it on case studies, modeling tests, and what education did you have and do you fit within our firm?
And it feels like when you started this firm, kind of right place at the right time, as this industry has grown. Executive search for private equity, private equity professional search has gotten, I think, as more and more firms grow to large sizes and need more people, I think you've been in the right place at the right time. I'm just curious how you've seen the industry evolve, how you've seen competition evolve. Maybe talk a little bit about that stuff.
Yeah, it's been interesting, really interesting to see what's happening. We saw a really good time when we launched the business in private equity, which good time if you're going to launch a business into something. It's hard when it's soft, right? And then we saw COVID, which was just fun for everybody, wasn't it? Let's face it, from a business perspective. And then we saw the bounce post-COVID. And we saw all that deal activity condensed, and everyone was like, yes, we're amazing. We finally cracked it. We know what we're doing. We're exceptional. And then post-COVID boom, hellfire, interest rates, debt's expensive, all these different things. So that aside, right, what's happening in private equity is absolutely fascinating. I'm going to compare this to the executive search industry. We are seeing the professionalization of private equity. We are no longer seeing 4 partners sat in a room, making investments in deals, holding on for 5 years, seeing the increase in the market, doing a roll-up if it's lower middle market, doing what's referred to as financial engineering, and then selling. Because it's so hard now to get deals, because it's so competitive. There's so many firms that spring up. We're no longer just seeing financial engineering, we're seeing value creation. We're no longer seeing the infrastructure of a private equity firm the same. Partners, we're seeing talent people coming into them. We're seeing marketing people come into that. We're seeing the operating partner happen. We are seeing the breakdown of the deal team from deal origination to deal closing to then operations within the portfolio company. We are seeing the segmentation like we have done in executive search, and we're still seeing in executive search. It's not there, right? But we're seeing people doing the jobs that they're actually good at, and we're breaking them down to increase efficiencies. We're seeing investors doing more due diligence on private equity firms, which is driving all of this. Who's driving your value creation strategy? Well, it's this guy who he's an investor, he's an investment banker. That's no longer washing. Who's driving your... Oh, well, he's an ex-chief executive. He's exited a business 5 times. He's done X, Y, and Z. He's done this, and this, and all these kind of infrastructures. How are you doing deal origination? Well, the deal team, will go to an event, no longer good enough because everyone else is there. Well, we just do it for investment banks. No longer good enough because everybody is doing it for investment banks. Proprietary deal flow. Cold outreach, cold messaging. We need marketing. We need somebody to actually have the conversations. We need somebody to run the discussions and to build the relationships with the investment banks, with the intermediaries, and directly. And we're seeing lots of challenges in private equity because it's so popular. Because private equity has created more billionaires than any other industry in the world. Real estate created the millionaires. Private equity has created the topmost amount of billionaires. And that's flooding the best possible people in to this industry, which is obviously driving it, but it's meaning everyone has to be better. So I think what's happening in private equity is amazing. I think the different roles that are coming into private equity is phenomenal. I think private equity firms are now turning into their portfolio companies and are starting to think, how do we actually operate with processes and systems and marketing and lead generation? And we're starting to see top of funnel conversations. We're starting to see private equity firms like you guys running podcasts. We're starting to see them doing cold email marketing to generate leads, to bring in new portfolio companies, to engage with founders and owners to get that first sale. And that is pretty exciting in my world.
Nice. No, it sounds like really good timing. And again, you're still in the right place at the right time. You have this idea that you share, I think, with clients in your marketing materials, is that you're de-risking the executive search process. That's an interesting way to frame it. What does that mean to you? And what are you trying to communicate when you say that?
So when you speak to, so first thing is you need an irresistible offer. Okay. And in any business, as you grow and you scale, the irresistible offer is so important. Because it's just that bit that can just get things over the line, right? So that's what our de-risking executive search is. And the reason we built it was because a really good, a better than me at marketing and branding guy came in and had a conversation with us and said this should be a tagline. So I'm not going to claim to have come up with it, but I love it, right? What is the biggest thing that any investor talks about? It's all around risk, their risk of their investments, and that's all they talk about, right? So we listened to, if anybody listening within any industry, you listen to your customers. What are they saying? We understood that was their language, so we used it. And what were their challenges? So many search firms taking on searches, if you want to go with the big kind of private equity firm example, as I said, lower than 30%. Some of these guys are at 22, 19, 18. Some of it's horrendous, right? But lower than 30%. Why? Well, a search firm will take on a search and they won't fill it. Or a search firm will take on a search and they'll put a crap candidate in there. Insert loads and loads and loads of challenges. They take a deposit and then we hear nothing. They take a shortlist and all the candidates are rubbish. So we went, well, why don't we take that away? So what we offer as a business is a upfront deposit that is fully refundable if we do not perform. So if for any reason our clients are not happy with our service and our process, they tell us and we give them their money back from an upfront deposit. No cancellation, all good. Thank you very much. Now, that for us is the right thing to do. It also attracts clients to us because it's a no risk free, and private equity investor doesn't like a little bit of no risk.
And I love the alignment there. I mean, what you highlighted is that the traditional model has all kinds of misalignments and kind of misincentives. And so you guys are aligning yourself with your client, where if your client's not successful, you're not successful, which I think in any business is a good place to be. That's really interesting. One thing, and you kind of keep touching on it, but I think there's a lot of people listening to this podcast who would love your insights on, when people are making those wrong decisions for portfolio company executives, like what are the typical mistakes do you see? Are they generalizable? Is it really bespoke? It could depend on the situation, or do you see consistent, like this is when people make mistakes, this is what the kind of mistakes they're making?
So let me start this with hiring is guessing and firing is knowing. And hearing that from an executive search guy that should be telling you that he's unlocked the Pandora's box is not exactly comforting, but it is factual. There will always be a variance in hiring. The difference is most people sit below 30%, and what people should be sitting is at 80 and 90. There should always be a level of variance because it's people and stuff happens. You get your new phenomenal chief executive and his wife passes away and he's no longer a phenomenal chief executive anymore, right? You get the phone call that he's got the big C or she's got the big C and it's all, I'm not doing it anymore. You're always going to have a level. The person's burnt out, they're done, they've done 3 exits, the 4th one's too far and they're not interested anymore, they've made their money, right? There's always going to be an example, okay? The examples that shouldn't be coming to the forefront are because the fundamentals have been missed, right? So, classic picture book on a podcast, right? But I've just written a book about this. And part of the reason I wrote the book was because I wanted to document my ideas, but also to create content for the business that ended up just turning into a book. But there's lots of missteps that happen. One is that they haven't invested enough in the process, right? When I haven't yet met anybody in probably even executive search, to be fair, right? But in the private equity firms that have been trained in hiring. We had a sizable firm reach out last year, which, depending on when you listen to this, was 2024, and in private equity firm. And one of their associates reached out who was 2 months, 3 months, 4 months, whatever, in private equity, come out of investment banking, and was talking to us about this particular urgent hire. And my answer was, well, you've worked with this business for 2 to 3 months. You've probably not got your feet under the table at the firm yet, never mind the portfolio company. Why is this person driving the hiring for this? Okay, I understand everybody's busy and everyone's got things, and I've got people in my business that help us with internal hiring processes, but fundamentally, when it happens, it sits with me because it's the most important thing. Of course, I would say that is the industry I pitch, but anybody who looks at any business problem, I can't remember who said the quote, but 95% of all business problems are people problems in disguise. Okay, so in order to answer the question of what should people begin to look at, the first thing that everyone needs to look at is, what are you actually wanting this person to do? And there's a whole period for private equity firms. It doesn't matter where you work for a private equity firm, we'll focus on the portfolio company, but it doesn't matter where you work in private equity, portfolio, public business, whatever. There is a period of time that you want to do something, and that could be a month, and that could be 5 years, that could be 10 years. And if that, from a private equity perspective, is always 5, ends up being 7, usually 8, right? Of a whole period to exit the business and triple, double, whatever, EBITDAs and obviously revenues. There's 3 stages of that. There's the here and now problem, which most private equity focus on. We need a new ERP system. We need to professionalize the culture. We need to do X, Y, and Z. Then there's the end of, we need to sell the business, and this person as a chief exec needs to come in and go to the investment bankers and sell this business. And there's this big whole chunk of stuff in the middle, which is all the important things that everyone goes, well, it'll sort itself out. Don't worry about that. We don't need to identify it. So the first thing I tell everybody to do is to build the most excessive scorecard that you possibly can, right? We have this on our Raw Selection website. I'll send the link over so you can go in the show notes, but we have an example of a scorecard that we built out and we've worked on excessively. And that assesses both the executive requirement of this individual, but also the executive team. So what skill set does the CFO have? What skill set does the COO have? Because you could be hiring for the same skill set as the CFO. Why? There's no point. Leverage their skills. There's going to be foundational ones. You're doing a roll-up, so you need to have a team that has experience with roll-ups. You're a services businesses, so you want guys that have experience in services and launch projects, cycles, or whatever, right? There's always going to be fundamentals. But building out an exceptional scorecard is always important. There's lots of different missteps, but I'll choose another one for the concept that we're not going to sit here for 10 hours and discuss it. But the second area is just not having an interview process and selection process, and making sure that you are building out what the process looks. And I don't just mean we do a first, second, third, fourth presentation over. I mean, what are you actually looking for in those interviews against the scorecard, but also who's driving those discussions, who's having them. So making and working every time you do an interview, just building that out a little bit, even if it's just 5 minutes of just reflection, right? But building that out to what exceptional looks like, whether the presentation is actually useful. In my opinion, the least useful presentation question is, what are you going to do in the first 90 days? Because every executive will tell you they're going to do nothing and they're going to review their portfolio company. And that is the right answer. And then when they get into the business, you put pressure on them as an investor to go, what are you doing? Well, I said 90 days, I'm going to review and I'm going to talk to everyone. No, we need to get this ERP implemented. But you asked me in the presentation, you said it was a good ad. Oh, no, don't worry about that. Just you need to fire him as well. And we need to hire that. Well, that's not 30 days, is it? And that's not 90 days. So what's the point, right? It's a pointless question because they also don't know the business. So really building out a really strong interview process and really knowing your scorecard will get your percentage up significantly above the likes of the big private equity firms.
And what are your thoughts on the effectiveness of personality tests like Myers-Briggs or Enneagram when searching for the right person or building the right team?
So my simple answer is they're absolutely useless, but somebody's built an industry on it and has some weight through it, right? I've seen people spend huge amounts of money, as I've seen 8-hour tests. I've got a private equity client who put somebody through a whole process where they emulate an executive being in situ, and they run a whole process around backwards, forwards questions. They're a chief exec, the HR person called. It's all live and real. They do a potential test. They do X, Y, and Z. I can tell you that the executives they have that they've hired, obviously not from me, but the executives they have that they're hired into their business, they have the same portfolio problems as everyone else. Underperformance, not the right people, needing to make replacements, and not happy. And they've got one of the most rigorous processes from a testing perspective. Myers-Briggs, Insights, all the rest of the guys do not predict performance. They give you a personality preference. They give you a element of someone's individuality. Now, the time that I would tell you that these things do work is if you test everyone in your portfolio company or everyone in your business. It doesn't have to be excessive. You've got 1,000 people. Don't test everyone. Test your management team and your senior management team or whatever, right? And if you can find a correlation between what that test shows you and your highest performers, use it every time and stick to it without fail. I can tell you now you probably won't. And if you do, give me a call because I've not seen anybody do it yet. But if it doesn't predict performance, it is a waste of time. And I'm sorry if that puts a lot of people out of business with regards to what they do, but nobody listens to me that much. So, but yeah, I don't believe in it. Now, the caveat that I do talk about is I do talk about a test and I do talk about it being valued. The reason I talk about it being valuable is there is 2 tests that you can do. One you cannot do in America because it's illegal, and that is an IQ test. The smarter somebody is, the more likely they are to perform at a higher level than somebody who is not. Now, that's pretty obvious, Alex. Thank you very much for that insight. Second test you can do is their conscientiousness. The harder somebody works, the more likely they are, when paired with intelligence, to be a high performer. But that is the only 2 tests that you can do that will predict high performance. You can also look at neuroticism and other bits and pieces, and we look at that for internal hires. But if you're going to do Myers-Briggs and all that kind of other stuff, if somebody's out there and they've proven it and it really works, please tell me. But I've done tests on portfolio companies and I've not found a correlation between any level of answers and test results and high performance. They're all different.
I love those contrarian perspectives, and thank you for sharing them. I want to switch gears a little bit and talk about the verticals that you guys have developed an expertise in. I think especially you guys have spent some time in the HVAC service and maintenance world trying to find executives there. I'm just trying to get a sense of, the first question is how did you select these verticals to become, move from the generalist model to have this expertise in these specific areas?
So the models in the business, the areas that we operate in predominantly come from my background. HVAC services is actually not from there. So my prior experience has been predominantly within industrials and working with manufacturing and services companies to support them. I've actually never done any work in HVAC services. We just ended up in that space, which I'll explain. But everything we've done with regards to portfolio side has predominantly come from where my knowledge, expertise, and then our clients have guided us a little bit because of that. But we've always kind of fallen back to industrials and fallen back to services. We're starting to open up new lanes. We've gone into healthcare. We're potentially going to go into tech if we make a new appointment. But there's no right now. HVAC services is a little bit different. The reason that that's on fire is because it's an incredible, I'm going to use the term unprofessionalized industry. It's very fragmented and it's very unprofessionalized as a services process. And the talent base in that space at the moment is very, very weak. So a lot of private equity firms are diving into that region and arena currently to make investments, even though actually, if you look at building products, if you look at aerospace, defense, manufacturing companies, the actual deal flow in comparison with HVAC services is considerably smaller. But the reason that it's on fire is because the executive level in that industry is pretty weak because nobody's really scaled of anything to any mass level. Apex Service Partners, all those guys have done incredible with regards to what they've done, but there's just not enough of those companies yet. That means that there's lots of executives to swap around, and everyone's kind of going into that area because it's a process play, and technology firms are really expensive to buy, whereas these companies are fairly inexpensive, and they can roll them up and get a pretty decent multiple on the basis that you've got basically critical mass. Whereas to buy a software company on an LBO majority model is quite difficult on the basis that it's a 15 to 20, possibly more EBITDA multiple. Whereas you can pick up one of these HVAC services companies for a 3x in comparison. So that's why private equity. And then obviously you can scale on the basis of standardization, process, systems. And that's why they love that at the moment.
Got it. And like what does it take? I mean, you guys are starting industrials, you're starting to branch out healthcare, maybe tech. Like, what does it take for you to invest in that area? Because I know you want to be the best. I know you want to be best in class, and you don't want to do anything where you can't be. What is it going to take? You know, what is a hurdle for you to say, like, this is a place where we can win and be best in class?
It's a really interesting question. I think it comes back again to infrastructure, processes, systems, and replication of what we're doing already in one market to then expand into another. And there's always the question around when and why. I've always been a big believer in diversification until I brought a Ned on into our business, who was a big believer against non-diversification. I was always trying to go after the new thing and the thing, right? There's a guy called Alex Rawlings, which is a private equity investor, but it's kind of his own wealth, not family wealth, his own wealth he invests in, and he will no doubt raise funds, I'm sure, sometime in the future. But he talks about you do more, you do better, and then you do new. So that is the model that we follow before we diversify anything within the business, is we understand that can we do any more in the spaces that we're in? Can we do, more, better, and then best?
And one thing that I want to touch on before we leave the discussion of your processes and talk a little bit about your other activities outside of just looking for executives is, there's this, if I'm the client, I want a person now, I wanted them yesterday. And, there's this desire for speed, and you have this desire to have the right person in there who's going to stay. And so that firm comes back to you the next time they have a hire. How do you balance that desire for speed with the desire for quality and accuracy in terms of the executive?
It's a really tough question because all of our private equity clients want candidates immediately. They want them, as you said, yesterday, but that's not going to be realistic to run it through. And even if I have them, they still take 3 months over hiring that individual. And this is going to be a bit of a shock of the executive search world. So they should. Now, I don't recommend that you take 3 months. I recommend you take the amount of time it takes you to go through your process and run it effectively. Again, something I've talked heavily about is the pain of a gap in your business is a lot less painful, albeit it feels it, than having somebody in your company who you need to get out. I get a lot more buyer's remorse and regret from private equity firms and executives who have hired a crap person than they have having no person. Interims exist, temporary people exist. Hire 2 people to fix the one person problem until you find it. All of this infrastructure can be done. Do not rush your process. Do not listen to the recruitment firm that tells you you need to move faster in the 95% of scenarios. And I have a client I tell to move faster, but I don't tell them because they need to rush their process. I tell them because they take, like, sometimes it feels like years, right? But you have to run a process, and it has to be everything ticked. You can run that process in a week. I wouldn't recommend you do that, but you can run it in a week. Would be fairly intense for the candidate, and for you. But you have to tick every step. You do the references, you do every conversation, you do background checks. You don't go, oh, it'll be the same, this one, don't worry. You do every conversation. You dive into their sales process if it's a sales leader. You dive into their M&A process. You dive into every single thing you need on your scorecard. You cover and you tick and you make sure you get where you are at 80 to 90% confident this is the right person, and then you make the hire. You do not make the hire on the basis of a rush. You run a process and you do it properly. But that sounds obvious, but that's just what you have to do, and just avoid the problem of the wrong person, because they'll cause you a lot more problems than they will anything else.
And as you mentioned, right, this is a business where you're hiring people, and people have all kinds of things happen to them, and no one from in your seat can get it right 100% of the time. So when you, when you and your team are not getting it quite right for a client, what do you typically have to change about the process or sourcing? Like, what do you do to course correct midstream if it's not yielding what you'd hoped it would?
So I'm a big believer that you just go back to understanding the brief. You understand the problems, pain, the start of the investment process, start of the whole period, middle of the whole period, end of the whole period. You understand the business in its full entirety, and you go, what are we missing? What can we not find? Why is this business not attractive? Now, I've run some pretty horrible searches in some pretty horrible locations, and they can be particularly difficult. The worst search location-wise I've done is South Dakota. No offense to anybody who lives in South Dakota, but nobody wants to relocate there unless you live there, right? Most people I speak to in the US have never even been there, unless there's a reason. And Ben's shaking his head for those that are listening and not watching, right? So you have to understand there is a level of flex if you're going to have a level of, we've got a business, it's in a real remote location, and we want all of this criteria. We've got a business, it's just been bought out of administration, it's racked up with debt, the exit's not going to be attractive this turn, the next one will be, do you want to come and lead it for 8 years and sell it? Hopefully twice, but we don't care because we only want to sell it once, and we'll get our return of a 1x or something, right? So you have to have a level of flex. Not every business is Uber. Not every business is Google, right? Not every business is the big, sexy opportunity that's flying through the skies. And you have to go back to your scorecard. You understand your non-negotiables. And then from our perspective is we go back to the data and we understand, have we got an exhaustive list? How have we sold this position? And how can we get that list exhaustive? How can we sell that opportunity better? What's our avenue? What can we position? How can we make this more attractive? And that's how you do it. And you just keep doing that. And eventually you will fill the position in the middle of nowhere or South Dakota that needs something really, really skillful where nobody in South Dakota has it or wants to work for that company.
And given that this is a podcast and we are both podcast hosts, we can't leave this conversation without talking about your podcast, the Private Equity Podcast. Just curious how that experience has been for you so far. How do you feel like it's helped your business? To just love to hear your perspectives on the value of that time that you have invested on the podcast.
We're in the information age, aren't we? We've got lots and lots of content and lots of people to listen to. The benefit of me running the podcast is it does excellent brand awareness for our business. It produces us content that doesn't mean that I have to create it. And I get to interview people that I wouldn't normally dive into with regards to what I want to learn from them. And I don't have to pay them for it, which is beautiful. I get to assess people's processes, understand people's scaling, how I've had people from, I will never, when somebody from Hamilton Lane on there that runs their whole head of private equity, which is billions of assets under management, right? He would never speak to me from some guy in Leeds that's doing work in the US. He works with all the Shrek firms or whatever else. But I got to interview that guy, and I got to learn how Hamilton Lane sees private equity. I'm going to interview a guy that's done 5 private equity backed exits, which was actually a candidate of ours, but 5 private equity backed exits, and delve into the detail around their process and their systems in more detail than I would do in an interview. And I get to hear it from them live, and I get to experience that. So not only is it just fantastic from a business perspective of brand awareness, but also you get to speak to a lot more people than you normally would, and it's bloody interesting.
This is the reason. This is the main reason I do it too. Right? Like it's the branding aspect, but it's a relationship aspect, and it's a learning aspect because I get to talk to people who are doing different stuff all around the world, which is, for someone who loves learning about businesses and talking about business, it's the joy of being a host. And you also mentioned your book, How to Hire. We talked a little bit about the what's in it, but talk to me also like why spend time there. What do you think the return on that investment and time is going to be for you and your business?
Yeah, it's a classic. Guy runs a podcast, also written a book. The old classic sell, right? But look, I didn't write the book to sell it. I wrote the book to engage with our prospects. Everything I see from a marketing lens, well, not everything, but those things I've seen from a marketing lens. How do we grow brand awareness of my business? How do we grow our way of speaking to people when they're not hiring, they're not going through process? So for me, it was actually started off just as a content play, and I was just making some notes on how people could improve and think if we could create a few white papers to help people to obviously generate leads and generate awareness, and basically then chop it all down and distribute it across our stuff. And then I just kept doing it and spend 2-3 hours a day for 6-7 months at a time, as a time period, and just kept adding to it. Every experience I had with a client, I added to it. I added real life examples of horrible searches that we'd done, real life examples of mistakes that people have made, mistakes that I'd have made, and just built it all into that. And it was bit cathartic at the bit of a release as well at the same time, but it was always just based on the fact that I want to engage with our clients, and that's why I'm not interested in really selling it. I don't really care if we sell one book. All I'm going to do is get that in front of every single private equity investor I possibly can, and if they learn one thing from it, they may remember the Raw Selection and my name's attached to it, and that they may work with us in the future. And it's going to cost me 10 quid to print, and there's a lot more expensive business development strategies you can do than 10 quid in front of somebody. So let's see if it works. It's not gone out yet, but it will be live soon, and let's see if it works. So that's the pure reason why I've got it. So this isn't a book pitch or a podcast pitch. That's just literally the reasons why I've done that.
Well, I'm curious to get a chance to read it, because this is something that, whether it's hiring, and I've done a fair amount of helping firms hire, my firms hire investment professionals. And, in the portfolio companies that Devonshire works with, we're always thinking about trying to find the right candidates for all kinds of roles. So I'm excited to see how it plays out for you, but also to learn from your experiences. So we're going to close with a question we ask all of our executive guests. What do you think is the most underappreciated aspect of the growth opportunity in front of Raw Selection today?
What do I think is the most underappreciated growth opportunity in Raw Selection? Now, unfortunately, I'm going to answer this like every executive search person in the Well, no, actually, I'm going to answer this in 2 ways. One is going to be talent, but I'm not going to answer it in the way of hiring people. I'm going to answer it in the way of my capabilities, my experiences, my perspectives, my self-development. That is the single, and that sounds very arrogant, but it is, because any executive who's leading a business, founded a business, growing a business will have that. My ceiling is so important to keep pushing and moving to allow everyone else to continue to grow alongside that. And how, as soon as my self-development and my cap hits, that's where this business will significantly struggle because of how the position I want to play in this business, and I don't want to step aside. I want to be in this role till I die. I'm one of those weirdos. But that's why I would answer on the basis of talent, but I would point that good at me, not everyone else.
Well, Alex, this has been an interesting conversation where we covered a lot, where we covered the founding of the firm. We talked about the problems you're solving for your companies and partners. We've talked about your contrarian perspectives on the hiring process. And we've also talked about the importance of data infrastructure. So I think listeners are going to really enjoy this. And I sincerely appreciate you being on the podcast.
Absolutely. Thank you very much for having me on, Ben.